I'm Jeff Turnahoy, head of America's research at Lipper, and today I'm joined by Scott Skowronski from Brandis Investment Partners. Welcome, Scott.
Thanks, Jeff.
Well, Scott, your fund, the Brandis Smart Fund, won the Lipper Award for the top general bond fund over 3 years. Let's talk a little bit about this fund strategy and what sets it apart from its peers.
Well, at Brandis, what we do is we apply the Graham and Dodd value investing philosophy to bonds. And so within the strategy of this fund, we're applying that process to corporate bonds and other fixed income securities. We take a longer term time horizon. We look at securities that we feel the market is mispricing, try to buy them at a discount, and then own them while the market readjusts the price to more of a normalized environment over time.
So would you describe that as a top-down or bottom-up approach?
It's definitely bottom-up. We look at each security one by one. The portfolio would typically only be 60 to 150 names, but it's a bottom-up approach that we feel is a much more repeatable process over time.
Is that process more suitable to an aggressive or conservative investor?
Within the spectrum of fixed income, it's a little bit more aggressive. It would be less aggressive than a high-yield strategy or a typical high-yield fund. The majority of the holdings in the fund are still investment-grade securities, but it's more aggressive than your typical investment-grade intermediate-term taxable bond fund.
A lot of people were surprised at the success of conservative strategies last year. Do you think that's likely to continue this year?
By conservative strategies, I assume you mean longer-term treasuries, and the short answer to that is no. It seems tough to believe. In 2011, the 30-year Treasury bond was up over 30%. It seems that's not likely to be sustainable going forward. While not impossible, it doesn't seem sustainable.
Right. So what parts of your portfolio do you think are better poised to break out this year?
Definitely within corporate bonds. We believe, especially if you can get away from the averages and look at some of the outlier securities within the benchmark or even outside of the benchmark, that there's still plenty of opportunities there to pick up yield and securities that are lower dollar price that could appreciate in price as well.
I also noticed that your portfolio is duration neutral relative to the benchmark. Can you talk a little bit more about why that is and where you expect to deliver alpha?
Sure. We believe that you can generate alpha best by using that bottom-up security selection, because it is a process that can be repeated throughout different market cycles. It provides consistency for our clients that we're doing the same thing over and over again, and that's where we attempt to generate alpha.
Okay, and what other parts of your portfolio do you vary from the benchmark significantly?
We would own more asset-backed securities than the benchmark, and also non-agency securities, non-agency mortgage-backed securities, that we believe there's good opportunities there in terms of yield advantages and mispriced securities as well.
How do you think that got mispriced in the market when talking about those asset-backed securities?
Sure. There's been more volatility, at least in 2011, with some of the geopolitical risks that are taking place in events. There's been more volatility within the market. So that's created some of these dislocations as we would look at them and feel that they're mispriced versus where they should be 2-3 years down the road.
Well, once again, Scott, thanks for joining me, and congratulations again on the Brandis Smart Fund winning the award for the top general bond fund over 3 years.
Thank you.
On behalf of Brandis Investment Partners and Lipper, I'm Jeff Turnahoy. Thanks for watching.